COSM, in order for us to understand the path that lays before us, we need to understand the path that lies behind us. Let's go ahead and validate exactly what that means. What is up, you guys? Thank you so much for stopping by once again on this happy Friday. This is ARCa coming at you with a technicals, raw price action, and statistical threat of analysis for COSM. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community and Discord called ARCab. With that said, let's dive right into the charts. Okay. Great day today for COSM. Everybody who has made some gains, congratulations upon the signals that we were actually firing yesterday. But let's go ahead and understand why this happened. Okay, so yesterday we did notice a very odd cross, right, from the volatility. So this is volatility you're looking at represented by BBWP. Now, these circles were made from yesterday, right? These iterations were all from yesterday. We were noticing that we made an interesting cross with the volatility component of the BBWP indicator, and it crossed above the moving average here, and that was essentially the signal that fired off before we made this momentous move to the upside, back in November. So we actually did notice that here as well. We were like slightly back over here, right? Since it's a day's iteration. So we combined this cross alongside the momentum indicator being at critical oversold and below this red trend line that we had here prior. So you can see right here that we did have that cross below that. We mentioned that we needed to have both of the moving averages, not just one, because we were already getting the move from one of them, right? But the other one needed to be completed as well. Now we have both of them pivoted towards the upside. Okay, very interesting thing here was that we caught it yesterday and we said the potential of us, seeing something could possibly be present. Okay, so now, particular to the statistics test, to the statistical back test regarding volatility versus momentum. Okay, so I have explained this several times, except that this iteration was a little bit different than the others. Okay, so, and different is regarding timing. Okay, so in this case, we were able to notice actually throughout the entire trading history of COSM on the daily chart, I've actually taken note of every single iteration where volatility versus, these are all my notes here, right? So that I can understand where we could possibly go. I have taken note of every single time that volatility has reached the critical volatility zone, which is within the 90 percentile, and started a contraction phase towards the downside alongside momentum guessing the upside. Okay, so I have tested stochastic momentum several times before, and that's given me about a 75 to 91% accuracy in guessing the asset's direction. So I've said it just like this before too. It's not perfect, right? But it's very good to consider its probabilities. So and to factor them in, of course. So now we did make that cross, right? I'm sorry, we did make that cross, and we started moving to the upside. What's curious is that upon that test, we guessed how many times. We were able to see how many times the iterations were guessed correctly versus incorrectly. So that gave us a set of stats. Okay, so now those set of stats are actually right over here. Out of a total 35 iterations throughout the entire trading history of COSM on the daily chart in particular, we have had 29 correctly guessed iterations towards the upside, giving us an averaged upside accuracy of 82.85%. Now, the averaged upside thrust was corrected per the reverse split ratio of the 1:25 split. And I made the math to understand that the adjustment per that ratio was actually a corrected upside thrust of 100.378% over the span of about 13 and a quarter days. Okay, so now let's just go ahead and take a look at what happened here, okay? Because honestly, it looks like we could have measured this pretty good. So upon the firing of the signal, which was actually it was essentially upon this candle here. Okay, so let's just go ahead and take a measurement here from that candle. So I'm going to do it from the closing of the candle down at the bottom, right? I'm not going to do it from the opening. So because I'm doing it from the closing, because this was this was a day's iteration, and this ended up doing what it did by the close of that candle. So I just want to be perfectly clear about that, right? So let's go ahead and now measure exactly what happened. Okay, so from the closing of the candle, let's go ahead and take our measuring tool to the very upside of the wick, and it looks like we have moved a total top side of 107.62% to the upside. We were guessing 100.378 upon our back test. So this is absolutely met. Okay, so the statistical back test actually did work out pretty closely, and in fact it overshot it. The interesting thing here is that it's not done. This is where I wanted to get to. We've just started the upside momentum. I understand that some of these momentums can actually be short-lived, right? And they can be corrective and up and then follow that natural ebb and flow of the market cycle, right? But in this case, we are kind of pivoted aggressively towards the upside pretty fast. You know, it's incredibly fast. So now let's go ahead and move on to the next chart, because this move is not random. And this is where I'm going to show you, and we're all going to be like, what? Okay, it's on. Okay, so this in particular is the broadening descending wedge that we've been looking at for quite some time. Okay, so we thought that we were going to make that final upside move upon our test number 4 breakout. If you're new to the channel, then you're probably not going to know what I'm talking about by test 4. Okay, so I'm talking about the golden rule of 3. Usually we have 3 tests of the resistance, whether it be a descending channel or a broadening descending wedge like this one, or sometimes even triangles. Okay, so in this case, we did break out on that test number 4. And of course, after that breakout, we actually have to come back and then validate our newly converted what was a resistance into now a support. Okay, so we started validating, then we got that massive upside thrust and huge fake out upon that split, upon that reverse split. Okay, we came back and tested a very important area from a channel that I had before, and then it came right back up to just recover it. Same candle and everything. Actually, it didn't actually work as a second iteration. It actually never succeeded, right? So upon this, the fear of the reverse split, we actually came all the way back down, and we actually ended up touching down at the very lowest point of the void we've been talking about, which was this gap comprised of a wick high and a wick low of 2 candles in October, right? So we closed right at that gap. Okay, so now upon succeeding it today, we used it and came back to the 2.618 golden mean, and we used that as our spring to the upside. Now, why is this important? It's important because now the test number 4, which is usually the place where we end up breaking out, isn't the one that actually happened. But I have mentioned before that number 5 is also a potential, but after number 5 I haven't tested. Okay, so usually it's most of the time, more often than not, it's actually test number 4. Okay, so now in this case we actually can correct this and put down test number 5 for us, which is very good, very good. Okay, so now in this we're just going to make sure to just put a neutral color back in our the border here, and now we can see that this is test number 5. Now what happens after test number 5? Well, usually we have to come back, right? We have to come back and test our newly converted resistance again into support before a continuation to the upside. Please remember, per the playbook rules, I'm not saying we're going here, okay? Just please listen closely. Per the playbook rules, the take profit, or how to trade a broadening descending wedge, is actually found at the genesis of the formation, which is about $72. Definitely know that we're at $5 something, or 461. I think let's see our aftermarket close. It is at 461. Okay, so definitely know that that's a ways away. I'm just saying that this is typically how it's traded and can take weeks and weeks to get there. Okay, if that is the case. All right, so in the immediate short term, let's go ahead and validate what could be happening. Okay, now that we know that we have a 461 price range that we're currently sitting at, which is very close already to that to the newly converted resistance into support. So let's just go ahead and continue here. Okay, we're going to look at the Crypstex ARC-Series indicators, which was one of the signals that actually fired yesterday. Very interesting that it would fire off. Okay, so you can see right over here that we printed that long signal at the opening of this candle. Look at the data right up here. Okay, so please notice that that data is saying upon the opening of the candle. Okay, so let's see. I'm sorry. This was in the early pre-market, right? Probably the 4 a.m. Thing, right? So let's look at 4 a.m. Sorry, the information's down here. So that's January 20th, 4 a.m. We got the long signal on the ARC Armor indicator. Okay, so let's see. We have opening at $3.11. It gave us that long signal, and this thing rocket shipped to 640. Okay, so this indicator is actually an indicator that's comprised of several exponential moving averages, and all of the moving averages are placed together very close in proximity, algorithmically throughout the chart, so that we can gauge this type of wave of motion or directional waves, right? So these directional waves are also they also give us buy and sell signals. Okay, so for example, right here we got a long signal, right? It went all the way up there. We got short signal here, went down, long signal here, short signal there, right? And then we got this long signal of which wasn't printed actually on yesterday's video. On yesterday's video, actually, we were noticing that DBSI, which is another indicator from the ARC-Series Crypstex indicators, right? We noticed that we were at a 50-50 yesterday, and we noticed that it was actually very curious that we were there because we had been bears leading for a long, long time, right? So we noticed that we were even there as well. So very, very interesting things here. Now, DBSI is a different type of indicator, okay? DBSI actually is a statistical type of indicator that measures every single candle iteration throughout the entire trading history of the asset's particular time frame, in this case, an hourly. Okay, so we're still 50-50 here. Of course, it has been changed, you know what I mean? And we have flashed a short signal on this one here, but that's particularly because we may actually have to start testing our 13-day exponential moving average, which is very particular to ARC DBSI. If you are interested in any of these indicators, please send me a DM. We'll go over the subscription packages, okay? You must have either a free account on TradingView or a paid subscription account to gain visibility for these indicators, okay? But yeah, send me a DM and we'll go over those subscription packages and everything will be okay. All right, you guys. So now let's move on to the last part of the analysis. The other thing that we did notice was we noticed several drives of hidden and regular bullish divergence, which is usually when price action is making a series of lower lows, and momentum, in this case represented by RSI, relative strength index, is making a series of higher lows. Okay, so that's that event actually we noticed yesterday upon this candle right over here. Okay, so as you can see that the way we caught it was absolutely in relevance to the upside that we face today. Very good stuff. So this is very discretionary. Okay, this is our skills that we're looking at based on visibility, based on intuition, and based on feel. Okay, so this has nothing to do with mathematics. The statistical side is where we did that. Okay, so now let's open up a multi-pane to see where we're going. Okay, so let's take into account first of all our 30-minute immediate short-term time frame. Please remember that the upper half is the bullish control zone and the bottom half is the bearish control zone, right? So, or the bear control, right? Whatever you want to call it. All right. So please notice that the 30-minute has a pivot towards the upside. Okay. So this could, please remember that it can actually that it can actually live out pretty fast because it is a 30-minute. They're micro time frames, right? But 15-minute and 30-minute have upside continuations, which is very nice. Okay. We're definitely within the bull weakness percentile. So, and pivoted towards the upside. So this is still healthy. Okay. Bi-hourly is still showing us a bias towards the upside as well. As long as we are above the 14-day moving average, which is the pink line here, and I'm talking about the RSI signal in purple, as long as we are above that, then it's still on the bullish side of things. The 6 hour is telling us that we're facing a potential little reversal here. Not a reversal, I'm sorry, a pullback, and this is very short-lived as well. But what's catching the most attention right now And the most important thing that I'm looking at here is that we finally changed the pivot in the daily time frame. The daily time frame has been on this path like this for days, okay? And it finally kinked, and we're finally above the 14-day moving average, which is very bullish. We're at the junction between the bear weakness and the bull weakness, and at that gravitational zone where we can actually face a continuation to the upside. Here's the more curious part. By daily time frame upside, 3-day time frame upside, 5-day time frame upside, weekly time frame slightly upside, and let's see the bi-weekly. The bi-weekly is now starting to pivot towards the upside a little bit. So what we could potentially be looking at is a little bit of consolidation, some sideways trading, maybe a little bearish here and there. I'm talking about in the immediate short term for the next trading session before a continuation to the upside even still. Okay, now, if we're going to look at some upside targets, first of all, we need to see what kind of targets we already cleared. Okay, we came back and filled that tiny little gap that we made. We made this gap on December 23rd to December 27th. Okay, that tiny little gap, actually, we came right back up, rejected right back from it. Okay, and naturally, we would reject it. We came back and filled our objective, right? And now we're coming back to potentially test our newly converted resistance into support before a continuation onto the upside, which is in accordance with all of the momentum that we're looking at on the RSI. All right, so very good stuff for COSM. Definitely good stuff. Okay, so please remember that the upside, the immediate upside that we're looking at could be here. Okay, we're going to take a fib from the current day high to the swing low and just take a look at what we have here. Okay, so we're currently, let's see, the market close was right above the 0.618 golden mean, but the 461 is where we're doing after market, right? So please know that we are already within the golden pocket. Okay, the golden pocket is a bullish thing. Okay, 461 is just above the 0.382 at 447. Okay, so very likely we can actually even test the 447 on the next iteration, which is already very close to this newly converted resistance into support. Okay, so we can actually just wick slightly below it to about $4 and about 28, $4.30 before a continuation to the upside. But know that validations can sometimes take some time, and since we are in the daily here, we have to keep it into consideration. But please, guys, remember, I'm not a financial advisor. Take whatever I do show and iterate within these videos just a form of entertainment in any video that I put out, okay? As I can't suggest for you to buy or sell any assets. Do your own DD and everything will be just fine. But the first upside target that I would see as very relevant would, first of all, not only be between the 0.786 of 574 and the 0.618 in the immediate short term, but maybe following a couple days we can actually see the 836 touch. Or I'm gonna be more transparent with this. The one spot 272 at $7.28 to the one spot 618 at $8.36 would be our essential next resistance. All right, you guys. So that's what I'm looking at for COSM. Very good stuff, and congratulations to those who are in the money right now. And let's keep on making that. Okay, you guys. With that said, I wish you well, a very good weekend, and I will catch you at the bell on Monday. Adios.